So in this video, we are going to be talking about how powerful it is to trade off open print and end of day, right? Finding two levels that you can really watch and identify who's in control of the market and then making higher probability decisions based off it, right? So I want to talk about open print, I want to talk about end of day, and I want to talk about my moving averages, right? My three-step criteria, my process that I use each and every single day and how effective it was on October 15th, 2024. Right, so first things first, we're going to break into the pre-market plan, right? So over here on the Discord, I run through a bullish and bearish pre-market plan each and every single day. I keep it very simple. See, when you're trading off the pint numbers, you can keep it simple, right? Get rid of and throw those old days away where you're overcomplicating the market and trying to make good decisions and overthinking everything. Instead, find yourself a system that works. If you like my system, you can adopt my system, right? Join the team below and you can trade our system with us. It's highly effective, right? Bullish scenario. After yesterday's rally, I will be watching previous day high and end of day for buyers to show strength. I want to see buyers get back above the 1 hour 9 and build structure off open print for longs. No upside targets, right? Because the previous day, you could see here, was a massive rally, right? We were making all-time highs. Price was ripping, right? But we're not just going to assume that buyers are going to show up. Instead, we're going to be patient. We're going to allow large money, the banks, to make their move off our critical levels, and then we're going to make moves based off that information. See, we never predict anything over here at HPT. We only react. And when you become a reactive trader, you sit back on the sidelines, sitting on your hands, and you allow the banks to make their moves off the critical levels. And when you do that, and you throw the moving averages in there, now you have yourself a repeatable approach. Right, so that was our bullish scenario. Bearish scenario. I'm looking for sellers to show strength today at previous day high or end of day or open print. Right, those are three main critical levels. The only other critical level is previous day low. So in this scenario, if we're trading around three critical levels and sellers take control of it, statistically, it makes sense that price will revisit previous day low. You see what I'm saying? Because all the volume is at the critical levels. So if large money takes control of the three main critical levels, where do you think price is going to head? To the next highly volume populated area, which is previous day low. Previous day low is also next to the 50 EMA down here on the 1 hour, right? So this is how I approach the market. We'll be watching for bearish structure to be formed off the 50 EMA, looking for short plays targeting 58227 in previous day low. Graphical presentation, very simple. Whoever controls this sweet spot, I'm looking to trade with. Okay, cool. So now we're going to whip out the chart. Right, so for the purpose of the lesson, I'm going to use the 2-minute chart, and I'm going to also use the 5-minute chart. But market opens up. Let me whip out that 5-minute, right, so I can give you a little more of a context because I watch both time frames every single day. Right, and the main reason, right, when people ask me, when they ask me about, hold on, let me do this. When they ask me about, oh, which time frame do you use? Which, which one's better? It's not about which is better, guys. It's about what the moving averages are telling you on that time frame and your ability to understand it, right? So when I use the 5-minute, I'm really watching that 50 EMA, right? The 5-minute and the 1 hour I use to monitor the 50 EMA. I want to see how price is reacting off it. I want to see who is in control of it, right? Look at, so right here off the rip, we're above the 50 EMA. That's bullish. That's bullish until otherwise. So what I do is I'll identify open print. Open print's right there at 58460, we'll call it, right? And we're right above end of day, and then we fall below the 50. That's rather bearish, but there's no setup here, right? There's no setup. There's no market structure, right? The EMA clouds have not crossed over yet either, right? I'm looking for that sell signal arrow down from the HPT indicator, right? So I'm being patient. Price rips then back above open print, and honestly, it was starting to look like an alright long play right here. Hold on. Off the open, right? We fell below it. Now we're back above it. That's starting to look kind of bullish. I just needed a little more market structure there, and the 1 hour time frame didn't make sense to me, right? This was a mega sweet spot, right? I really needed to watch sellers lose it for me to go long, right? And then this candle comes in. right? This massive candle right here at, what time is this? 9:55. See, if you're not careful here, you'll butcher the whole trade, right? I've butchered plenty of trades in my past. When I'm talking about butchering, I'm talking about chasing, right? I'm talking about FOMO, fear of missing out. You're getting a very large red candle here, and your biggest fear is not to be wrong, it's to miss it, right? I get it. We're traders. We don't want to miss things. But you're never going to become a consistent, profitable, effective, disciplined trader until you accept the fact that you may miss the move. There's one main reason why I will not short this. It's because the moving averages, right? See this blue line, this 9D EMA, right? So anytime I get extended from this on the 5-minute time frame, I will not be entering a trade. I also use the same principle in precept on the 1-hour time frame, but we're not going to break into that today for the sake of time, right? So just know, on the 5-minute time frame, if I get extended from this moving average, I do not enter a trade. Why? Because 9 times out of 10, I've done the math, I've done the statistics, this happens. Boop! Price rips right back up to that 9D EMA. And this is the thing. If you're a day trader like me that trades futures or options, that's going to stomp you out. If you enter in down here, you will be at around a 40% loss at the top of this candle, right? There's no reason to do it. That's why the pullback happens. Ask yourself, how come when you chase trades the pullback happens? It's because 99% of other traders are chasing the trade. So large money literally smokes them, liquidates them, and then the move happens, right? So guys, remember, do not chase. How do we know? Use the 9D EMA. If you get extended, you do not enter. And I don't even care what moving average you use. Just find one and start to identify what a healthy trend looks like and what an unhealthy trend looks like. And then you will always be able to sit back patiently before entering the trade, not chasing, not putting yourself in vulnerable, irrational scenario. So now I'm looking for the open print retest, right? So now this is where, so now we've determined, okay, price fell down below the 50, right? This candle is very bearish. This one rips back up into open print, right? So, but we're back above the 50 EMA. So honestly, as of right now, this is kind of choppy. But I can tell you this, it is not bullish, right? Things are not bullish right now. They're not really bearish, but they are not bullish. And if they're not bullish, that's leaning more towards the bearish biased, right? And then, so once price drops below the 50 EMA, we close below end of day. At that point, my 2-minute time frame comes out, and I go, okay, I need to identify sellers, right? Market looks like this. So on the 2-minute, we rip back up into open print, and then we get some selling, right? So once price falls down below open print, and this candle wipes out the candle in front of it, right, this green candle, I'm now in the market short. So right here, when this candle, and I want to be very clear here, right, because entering is hard, and I don't think traders are clear enough for all the students out there, right? When this candle sells off and breaks the bottom of this candle, at this point, I am bearish enough to enter the market short at 584.30. My stop loss is going to be above this candle. I want to get in right here for a few reasons. One, so that my stop loss can accommodate open print, right? And basically what that means is I want to be able to hold through drawdown, but not blowing out my whole position, right? I want to be able to hold the trade for a max of 30% loss and allow price to revisit open print. Basically, I want insurance in there that sellers are going to control the open, and I'm going to give them enough breathing room to do it, right? Hope that makes sense. It's very important. I do not want to put my stop loss. I don't want to enter here, right? Because if I enter at the bottom of this candle, this pullback is going to stop me out, right? I want nothing to do with it. Instead, I want price to rip up to open print and start to sell off and get in close enough so that I can stay in the trade, right? So let's go back to Discord over here. If I whip out SPY alerts, I'll show you guys. I'm in shorts here at 10:10 with an open print stop, right? Very nice push trim. So my first trim was down here at 10:13. All right, so yep, 10:10, just like I told you, we get in the market right around here, open print stop. Our first trim, you guys can see immediate 50-cent move happen, very large, very quickly, right? And one of the reasons why I trimmed is because, once again, on the 5-minute time frame, when you get extended from the blue line, right here at 10:10, right? You guys can't see it, but look, right? See, 10:10. At 10:10, we're very extended. This was my first trim, right? Because we were a whopping, let's see here, 41 cents away from the 90 EMA. So unless I'm willing to hold through a 43% pullback with no profit taking, which, if you ask me, statistically is not a good idea, right? If you're up, I think I was up around 30% return already, right? If you're hitting 30% ROI, especially in these market conditions, you have to be profit taking, right? Do not be the guy that holds through the whole trade with no profit taking. That's not smart. Stop doing that. It's costing you consistency, right? So also, price sells off, we take profit, and now it rips back up into the 9. Let's see here in the Discord, I go looking, watching retest here to add in, right? So notice, we pull in, we retest the cloud, right? And then price starts to sell off gloriously, right? So this was a beautiful spot to add into the trade. Josh, how can you add into the trade with such confidence, right? Because, guys, I've been logging these trades long enough to know if 3 critical levels are being defended, right, it's a very high probability that price is going to make it to the next critical level. The next critical level in this scenario was 58127, which it literally hits. Josh, where did you get 58127? Guys, I can't make this shit up. I really can't. Ready? The previous day open print. So the previous day open print, which is right here, right? 58127, which, guys, remember, what's open print? Open print is a pit number, a critical level with all the volume. Look at the volume. Price literally went from this level, look at all the volume, end of day, to this level, where all the volume is. This is an auction. When buyers lose critical levels, sellers take control, and price rallies to the next critical level. This was a phenomenal trade. What I loved about this trade was the fact that 80% of our members caught it, right? I love you guys. You guys are putting in the work. You guys are actually learning. You're making the appropriate changes, and you're starting to see the appropriate results, right? So, guys, I really hope you enjoyed this lesson. I wanted to get really transparent with it, my entries, my exits, right? My goal is to help all traders alleviate that tunnel vision, that anxiety, and become the absolute best versions of themselves, right? So, guys, if you like this video, make sure you share it to somebody, right, that needs to see this, right? Make sure you hit a like, subscribe, and also, we have 2 spots left open on the Trader Bootcamp promo, the end of summer special, right? That's $100. You get 12 months, full free access to my team, to my army. This is live trading. This is live voice trading, all that. Webinars, Trader Bootcamp. Guys, take advantage before it is gone. I love you all. Become better traders. I'll see you in the next lesson.